Ed Yardeni addresses the current state of the markets, stating they are in correction mode with the possibility of a 10% decline. He emphasizes concerns over persistent inflation and the Federal Reserve's cautious approach to interest rates, as well as the impact of political developments in Washington and potential strikes on the economy. Yardeni also highlights the complexities of tariffs and currency fluctuations under the new administration, indicating that these economic factors require careful monitoring.
Rates much more next year, and now they're talking about 2 rather than 4. There's a longshoremen's strike potential in the middle of the month. And then, of course, there's always my friends, the bond vigilantes. They're getting a little twitchy here. They're not really happy with what's going on. I think Trump, for a while there, bought himself some time with the Doge boys, or that were set to kind of make things saner in Washington, and that's a big task, as we're seeing.
You do point to some, I guess, quote, bad reasons why yields are up. Is it mostly about D.C. and fiscal responsibility?
I think so, and also the fact that inflation seems to be stickier, and I think the Fed's coming around to that conclusion. They basically said that. I think they're now more even-handed here. They were saying for a while all they really wanted to do was keep the unemployment rate from going up because inflation was sort of under control. And now I think they're realizing, well, that's not quite true, and they didn't really get to 2%, and it's really not sticking at 2%. It's sticking more like 2.5% to 3%.
I am curious about inflation and how the consumer feels about that. We just got these consumer sentiment numbers quite strong. Many readings that we're getting on the consumer sort of tells us that they're spending, even if maybe they're not thrilled about higher prices. So how do you square that circle?
Well, you never want to bet against American consumers. When we're happy, we spend money. When we're depressed, sometimes we spend more money. Look, there's a lot of people my age. I'm still working for a living, but my friends, the baby boomers, are retiring, and many of them had 2 kids that are adults. They don't have mortgages. They don't have college payments. And they're sitting collectively on $76 trillion, not billion, $76 trillion of nest eggs. And they're starting to spend that. I think the savings rate's going to go negative. And by the way, they actually like to see interest rates high because a lot of them don't have everything in stocks.
Sure.
They have it in money market funds. So you have to kind of put that, we really can't, in other words, generalize about the consumer. There are consumers that are not doing well, where delinquency rates are going up. But all in all, the baby boomers are kind of keeping the economy growing.
What do you make about what's going to happen with currencies if indeed we do see some new tariff policy, whether it's increasing what we already are seeing in China, introducing new countries? How does that all shake out when it comes to currency?
This incoming administration has obviously a different view than the previous one. Although
the previous administration didn't lift the tariffs that were in place.
No, exactly. But I'm saying the previous one's attitude on globalization was, we all can work these things out together. This incoming administration is let's focus on America's interests and let everybody else focus on their own interests and see if we can come up with negotiated deals. So Trump's going to be using tariffs as a way to negotiate. But I think with regards to the currency, we may have a situation where if Trump raises the tariff by 10% across the board, that the currency is already up 8% since its recent low. And so that could be an offset. And that actually will force foreigners to pay for the tariff. If the dollar doesn't go up and they raise tariffs, then American consumers are going to pay it. So it's a complicated story, and nobody really knows. The thing about the Trump 2.0 is it's a lot of moving parts. And some of them, I think on balance, a lot of people think it's going to work out all right. But as we can see already, the devil is in the detail. The devil is in Washington.